Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the 8 consecutive days, the bears have pushed hard and at present now looks towards that 69, 80, 90 area and also has moved the RSI very much into oversold territory. With a large round of economic data this week, the markets will be keeping a very close watch, first of all on the RBA. It is forecasted that the RBA may lift rates from 0.1 to 0.25. Then on Wednesday, we have the US Federal Reserve when they hand down their interest rate decision, which is forecasted for 50 basis point, that is, rate rise, which would see the market take up towards around 75 to 1% range. And then on the main event, that is for Friday, we've got the US job data or the non-farm payrolls. So we do have quite a very busy week, and not forgetting as well on Thursday, the Super Thursday, as we call it, we do also have the Bank of England rate decision, which is also expected to raise rates by 25 basis points. In light of the pattern, I'm not getting too bearish at the bottom of this range, because when we look back here in January, the market staged a significant rebound, and therefore we could see this again. So as we get closer towards the bottom side, which is somewhere around 69, 80, 90, I do anticipate that the market may take a rebound back towards the top side. Now we do need to clear the level of 70.95, and then that would see a further progress up towards 71.5. The euro at the moment is recognising this, or the short term that is, support at 104.85.95. After 2 consecutive challenges, the market has rebounded, but it looks a little bit like a dead cat bounce, and that is the fact that we could see a little bit more downside pressure if we cut 104.85. If so, then that would open the way towards 103.40.50. Last week, the dollar index, which measures the greenback strength against a basket of 6 major currencies, recorded a 20-year high, that is at 103.92, but has backed away and is now flat at the moment at 103.40.50 area. Let's see if the market does take another challenge to the downside, and if so, as I mentioned before, close under 104.85 would see further weakness, but we are extremely oversold, so I'm a little bit cautious of getting short at the bottom of this range. Dollar yen still hovering over the support level, which is seen somewhere around 129.60.65. If we see a significant break there, that would reinstate the downside towards the bottom side around 127, or maybe even down to about 125. In light of the pattern though, with the yield differentials between the US and also with the Bank of Japan, it has made yen relatively weak. Sterling attempting to rebound off this level around 123.80 figure. Now, I did say that the Bank of England is forecasted to lift rates 25 basis points this week. So all eyes will be on, of course, Super Thursday and see if the market does. And at the moment, I wouldn't feel that the market will get too short at the bottom of this range, just in case we see a sharp rebound back to 126 to 127 region. With the recent target of the top side cleared at 194.40.60, I'm neutral for sterling Kiwi. And the fact is the market may actually be a little bit whipsawed up here. I'm not going to get too near. I'm going to keep a view of on the sideline at the moment, just in case the market does take a step back to the downside. And if so, we could see a significant drop back to 191. So this is why I'd rather be neutral at this level at the moment. Finishing up with gold and oil, well, the market is relatively weak again. Since that rejection of 1,914, we are looking at 1,878 again. And if we see a break here, that would give further exposure down to 1,848 to 52 and reassess. And also oil rejected that level of just above 106 and now looking back towards that 97 region as a potential target and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.